Alright, in today's video we're going to be talking about Fundrise, why I'm invested in them, what they offer, and whether or not you should invest in them. So let's get started. So what is Fundrise? According to them, historically investors who allocate a portion of their portfolio to real estate have outperformed those who don't. Fundrise makes investing in real estate simple, giving you the opportunity to benefit from greater stability and higher potential returns. So this is a form of diversification. If you're invested in stocks, I would suggest you to think about doing something like this. You don't have to dump a ton of money into it or anything, but it is an easy way to get invested in real estate. If you don't like REITs on the stock market, this is another option for you. So getting started is super easy. They have the web application here and they also have a phone app. But basically all you do is choose one of their 3 different portfolios, and then they kind of take it from there. So they'll create a portfolio that's designed to meet your personal goals, whether it's supplemental income or if you want to be more invested into equities, that is an option for you. So basically you just set it all up, takes just a couple of minutes, and then they kind of take it from there. Now they do offer dividend reinvestment, which is good, and then on top of that you can continue to make monthly deposits. I think the minimum is $100. That's what I do every month, so that's pretty much all it takes to set up. And then again, they have that app, so it's really easy to check on this if you want to and see how it does. This is their historical performance. I would always take something like this with a grain of salt. It's coming from the person that's trying to sell you something, but real estate in general tends to do about this. If you invest in real estate yourself, you should get probably more of a return, but with how passive and easy this is, these returns are pretty substantial, I would say. So it'll be interesting to see how they do in the year 2020 with everything going on. But again, this is a really passive income option for you. And again, if you want to diversify and just get into real estate without having to do all the legwork, that's what this is for. So these are their returns. They have all different kinds of assets that they invest in, whether it's commercial, apartments, restaurants. I mean, they do a really good job diversifying in the real estate sector. So that is something to take note of. Now let's pop over to my portfolio. So this is my portfolio and what yours would look like in a nutshell if you sign up. I opted for the supplemental income tab after doing my research. A lot of people seem to agree that that is the choice to make. I'm planning on investing with them for a really long time, but I do want to see movement, and I think this option was kind of a lower risk. You're mostly invested into debt and not equities, so I'm not relying on the real estate market as much to go up and down to get my returns. It's more of what people have to pay back, so that's why I opted for that portfolio. I like to see movement, so getting the dividends is something that excites me, as you guys know from my stock portfolio videos. So that's why I made that choice. But if you're not sure what to pick, they do just have the kind of middle option, which is the balanced portfolio. And then if you want to do more equity driven, obviously choose the last option. But it's completely up to you. That's just what I chose and why. So let's move on. So basically, like I said, they stretch out your money across a bunch of different projects. I have 58 active projects and I only have $1,400 in here. Think about how expensive this building probably is. So I have a little tiny piece of that, but it's really cool that they are able to diversify such a small investment so far. So it also helps keep your portfolio, I guess, safe in regards to different things happening to different locations and different markets. So it's really powerful that they're able to do such a thing. Really difficult to do something like that on your own. So this is the performance tab. I haven't been invested with them long enough to get that, but basically you have to be invested for a full quarter before they post that. So as soon as that hits, I'll be doing a video on that. This video is more about the overall platform itself. So looking at the net returns here, we've had some negative appreciation. That's from that equity source. So with everything going on right now, I do think that the real estate market is going to dip down, so I am glad that I opted for the debt option. But if you invest during a down time, the returns could be higher, so you can really look at it both ways. But I'm happy that I stuck with that option just because I don't want to invest in equities. I'd rather just do that myself anyways. So enough rambling there. Like I said, I do $100 a month, so that's what that transaction is. But in a nutshell, there really hasn't been a whole lot of returns. If you go back to the overview page here, I've made $10, but I literally haven't done anything at all, and that's the cool thing about this. So set it up, takes just a couple of minutes, and let it go from there. So Fundrise is a really, really long-term investment. At this time, I can't even pull my money out of this. That is part of the deal here. It is not something that you can pull out at any time. They basically have to say whether or not it's okay, and due to the illness that is going on and all the chaos with everything, they have basically made it pretty much a no if you want to get your money out. So that is kind of a kicker here. Your money isn't as liquid as, say, stocks. So that's pretty much Fundrise in a nutshell. I'm invested in them because it's extremely passive. It's not a lot of money, you know, $100 a month is what I put into this, so it gives me the diversification I need, and they are professionals investing in things that I wouldn't have access to, like this DC area industrial property. That's not something I could probably invest in on my own, so really good for diversification. But whether or not you guys should invest in it is totally up to you. Basically, if you're looking for an option in real estate where you don't have to do all the legwork and it's extremely passive, and you maybe have way more money than me and can get these dividends and just collect them as a payment every month, it's a really good option for that. So some reasons to not invest in them though: again, your money is tied up, the returns probably aren't as good as something you could probably do on your own, and again, there's just not a lot of options here. So you basically choose from the 3 portfolios, and that's pretty much all you can do. So whether or not that's a pro or a con, that's kind of up to you, but that's how I look at it. So I can leave a link for this in the description if you guys are curious. It will be an affiliate link, so basically it'll just knock out advisory fees, but as you can see here, that's really not much of a cost. But if you want to use the link, go for it. If you don't and want to set it up, that's fine too. Just leaving it there as an option for you guys. But that pretty much concludes the video. So if you made it this far, thanks for watching. Consider subscribing for more investing content, and I will see you in the next one.